Dusty Self, Munis were a big winner in 2015. Are the same forces that drove Muni returns last year still in effect today?
Yes, they are. From a macro level, we still see moderate growth in the domestic economy. We still see increased demand from investors. We have about $10 billion coming into munis so far this year. Supply is manageable at $64 billion. So those overall macro levels, those overall macro influences are still the same.
Well, munis have come down since mid-February when talks of multiple Fed rate hikes have eased. Can you talk about the relationship between Fed rate hikes and munis?
At RidgeWorth Seix short-term muni bond fund, we think that the Fed will probably increase rates at least once this year. But mathematically, increasing rates doesn't really impact municipals that much. There's enough going on in the market, and we're active managers that we're able to take advantage of whatever interest rates are or whatever direction they happen to be moving.
Well, you talked about manageable supply before. Talk about supply versus demand out there. We know demand is pretty high because people are worried about taxes going up. But talk about the supply side. Where's it coming from? Is it coming from the GOs of the world or the revenue? Can we see more sewers out there? What's going on there?
Well, so far this year, like I said, $64 billion. A lot of that, almost 45%, has been new money issuance. So we haven't seen the refunding this year that we actually saw this time last year. So we anticipate that as the Treasury curve continues to flatten, that there could potentially be more refunding bond opportunities. So we could see supply building there. In terms of GOs and revenues, there's still a decent split, but revenue bonds seem to be picking up as infrastructure projects are getting more press.
And speaking of infrastructure projects, let's get a little bit political. We keep hearing presidential candidate Donald Trump talk about building a wall across our southern border. Which presidential candidate you think would do the best for munis? Would it be Donald Trump or Hillary Clinton, Bernie Sanders, Ted Cruz? How is this playing out in muni land?
Well, at the moment, we haven't heard any really crazy ideas about tax reform, which makes us all very happy. And that really has to be our position to move forward. We're just looking to see who's going to win, how it will impact munis, but we're not seeing any real threat of tax reform at any point this year.
What about the threat of people switching to something with a higher yield? Because you look at munis right now, the yield is really, really small, especially at the short end of the curve. Why should investors stick with it? Why not go to a very highly rated corporate bond right now?
Well, again, the advantage for municipals are the tax advantage situation. You also have very low to negative correlation with other asset classes. So clipping your coupon, providing secure, safe income is a real advantage for most investors.
All right. Thanks a lot, Dusty Self.
Thank you.
And thank you for watching The Street.